Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 6th of June, 2023. Alright everyone, let's get into it. So, some big regulatory news over the last 24, 48 hours. What's funny about this is that it happened back to back, and there's a lot to unpack here. So, what am I talking about? I mean, I'm sure you're all aware by now. But firstly, yesterday, I think this happened after I recorded the refuel. Binance ended up getting sued by the SEC for a bunch of different things, and in the suit, the SEC has listed a bunch of tokens that they're deeming to be securities, which I don't really think there's much to that. I think that's kind of really weak, and I'll go into why. But just happened about like 15 minutes ago since I started recording this. Coinbase has also been sued by the SEC. Now, what are they being sued for? Well, basically, the commonality here between Coinbase and Binance is they're both being sued for enabling the trading of unregistered securities, and that those were those assets that I mentioned just earlier. There's a bunch of assets in there, some of them random, some of them not. It seems like they took a bunch of assets where they feel like that they could get the strongest case from, and then put them in the lawsuit. But yeah, they've gone after both Coinbase and Binance here. So look, I think this both angers me and kind of makes me laugh. And I'll explain why. It's kind of a weird thing. But the reason why this angers me is because it's just continuing the same old bullshit trend from with the SEC, from Gary Gensler, of not protecting anyone, right? Not protecting any investors, and doing this regulation by enforcement where they're literally going after. I mean, Binance, look, to be honest, early Binance, especially up until maybe, I guess, late 2020, was very shady, right? I'm not talking about them trading unregistered securities. I'm talking about them doing a bunch of other things like insider trading against their own customers, stuff like that. All that stuff hasn't been proven. That's just me kind of speculating there, but honestly, I think it's based on healthy speculation. It's not just conspiracy theory. I do think early Binance was definitely a cowboy town. From 2017 to like late 2020 was definitely Cowboy City. But in saying that, Coinbase is a weird one because Coinbase is a US publicly traded company that the SEC approved to go public, and they approved them to go public when Coinbase was trading these assets that the SEC is now deeming securities. I don't have the list of assets up with me right now, but funny enough, ETH isn't actually listed in there, so I guess Gary Gensler is taking a page out of Jerome Powell's book, and being labeled a security is now transitory, apparently, which is just weird. But I guess like, not just weird, but like, as I've explained before, I don't think ETH is going to be labeled a security. And I think that even things in these lawsuits that are being labeled as securities aren't going to be actual securities, aren't going to be declared as official securities, because the SEC, from what I've read, isn't actually going after each of these individual tokens and individual companies. They're going after Binance and Coinbase. And they're just using these assets as, I guess, like evidence that Binance and Coinbase has enabled trading of unregistered securities. So it's just to build their argument. Now, in saying all of that, I put out this tweet here where I said, Gary Gensler never even hinted at going after one of the biggest financial frauds in history, FTX, but he just sued the two largest crypto exchanges back to back, with one of them being a publicly traded US company. Protecting investors, my ass. It's never been about protecting investors, guys, and I've been saying this for years. I think that most financial regulations, if not almost all of them, are bullshit. And especially when it comes to crypto, where I'm not talking about like centralized exchanges. When it comes to things like DeFi, where things are very open, auditable, transparent, verifiable, like a lot of these financial regulations just exist to punish good actors. And we're seeing this play out with the SEC. They're just going after good actors like Coinbase. I'm not going to call Binance a good actor, so to speak, because as I said, they do a lot of shady stuff. I think they've cleaned up their act over the last couple of years. But it seems like the SEC went back as far as, I believe, 2018, and is kind of using examples from back then of shady stuff Binance was doing. But I think the biggest issue I have with this is the SEC once again trying to get things, or trying to label things securities without really proving it. Because no one can, I mean, okay, everyone can say something's a security, but you actually have to prove it based on securities laws. So Gary Gensler at the SEC, or the SEC as a whole, they have to actually prove that every single asset that they call is a security meets the definition of the Howey test, and then officially declare it a security and get a ruling on it. And usually that ruling has to come from a court, and usually it ends up in kind of like a trial, which is what the SEC does not want to do, because winning a trial is actually very difficult. So what ends up happening a lot of the time with these cases is that they get settled. The company behind it that pays the fine doesn't actually admit guilt or anything, but they do sometimes admit that when they issued the token, it was an unregistered security sale. But from my understanding, that doesn't make the asset a security still. So for an asset to actually be labeled a security after the fact, like obviously any asset that goes through the SEC. So, for example, a publicly traded company in the US, to become one and to issue stock, you have to go through the SEC. You are automatically a security. But to declare something a security after the fact and to actually enshrine that, you have to go through the whole process to do that. It is not something that can just be done by someone calling something a security, which thankfully is the way of the land in the US. But it doesn't stop agencies like the SEC and people like Gary Gensler just calling whatever they want a security, because they're just alleging it at the end of the day, right? They're alleging it's a security. They have to prove it is, but they know that just alleging it is enough to basically achieve their goal, which is basically get the headlines, especially for Gary Gensler, because he's all about career advancement. Get the headlines, potentially get a settlement, and then move on to the next case. And you know what's funny? Gensler's probably not going to be around for the end of these cases anyways, either going to move on to the Treasury or get fired if the Republicans win the presidency next year. Not exactly sure on the mechanism there, but I believe that there would be a way to remove him in that world. But yeah, it angers me, and it just disappoints me that we're continuing to see it. It doesn't surprise me, but that's kind of my thoughts on that front there. Now, why I said it also makes me laugh is because this just continues to remind me of what happened in the 2019 bear market. And this didn't happen in 2019, but there were similar things happening back then. But then, if people will remember, in 2020, I believe it was October 1st, 2020, BitMEX was, I think, not sued by the SEC, but the Department of Justice, the DOJ, charged the 3 top BitMEX executives with violating the Bank Secrecy Act, and they also, I think, I charged BitMEX with a bunch of things as a company, whatever it was. And at the time, BitMEX was huge. BitMEX was, I believe, one of the largest, if not the largest, derivative exchanges. I don't remember if they did spot trading, but they were big. You know, there were a lot of people trading on there. Now, of course, after this whole thing happened, they lost a lot of market share. But the funny thing is that if you go look at the chart of BTC and ETH on October 2020, it was just after DeFi summer, and it's when really the bull market started really getting going. Now, what's funny about this is that when you have one of the biggest exchanges literally get a criminal charge against them and against their executives, which is not what's happened with Binance and Coinbase from my reading here. It's not a criminal thing. It's a civil thing, so it's very different. But when you see this and you see the price not really breaking down, not setting new lows, and just kind of continuing what it's been doing or heading up, that is usually a pretty bullish sign, because what it basically tells, I guess, the world, the market, tells everyone, is that the market is out of sellers. The market does not want to go down. The market is over all of this. The market is exhausted. And I always think of that meme from the gift from South Park where Randy is like, "Is that all you've got?" And he's like completely beaten up, right? And he's just ready to keep fighting. That's what it's like in crypto bear markets. You keep getting hit, but you keep getting back up, and eventually you've been hit so many times that you're just like, screw it, I'm just going to keep going until I'm literally dead. And of course, crypto doesn't die; it just continues on through its next cycle. So I think that's what we're seeing now. Now, am I saying that price can't go lower than here? Of course not, right? I'm just saying that it's kind of funny how history kind of rhymes a lot of the time. It doesn't exactly repeat, but definitely rhymes. And I do think ultimately these cases with Coinbase and Binance aren't really going to go anywhere. And people are going to forget about this anyway in a couple of days, like we forget about everything because of the fast news cycle. But essentially, I don't think Coinbase is going to go down without a fight, especially because they have already committed to fighting all of these things, and they've already been sued by the SEC or no, they got issued that Wells notice, right? And Binance as well has said that they're committed to fighting this. So if they're committed to fighting, it's going to take years for this stuff to resolve. And by the time anyone even remembers about this, or by the time this gets resolved, no one will even care. I mean, it'll be a distant memory, right? So over the next few days, you'll see opinions on this. Maybe it won't even take a few days, but you'll see takes on this. The market volatility will be there, of course. We've seen it over the last 24 hours. But people will forget about this because a month ago, the DOJ, the Department of Justice, went after Binance as well. Have you heard anyone talk about that over the last few weeks? I haven't, and the market certainly didn't care because it started going back up again. So I think the market is not really sensitive to just generally to this stuff. Yes, there was volatility when when the SEC suit against Binance came out, and there's been a bit of volatility over this Coinbase stuff, but that really is just the opportunistic traders that are just starved for the volatility. They're trying to take advantage of any volatility because that's how they make their money, right? Or that's how they try to make their money. But generally, I don't think you have, as I said before, you don't have the tourists around. They're not going to panic sell. The long-term investors are not going to sell based on this. They're just going to hold through it all because we're Randy right now. We're like, is that all you've got? And keep hitting us. We're just going to keep getting back up because we are, experienced bear market participants at this point. I mean, me personally, I've seen some shit, guys. Like, I've seen some shit. I mean, I've been around technically since 2013. I saw MT Gox explode back then, and then I've seen so much shit since then. I am Randy on steroids right now. But for me, it's like, okay, keep coming. Building technology like this, building revolutionary technology like this is always going to be met with stuff from the old world that they don't like it, obviously. They're going to try what they can to slow it down, to potentially shut it down. But I don't know. I'm more positive than ever still. I think these two lawsuits really are going to be forgotten about in the next few days. Not really going to ultimately mean anything. And it's going to take years for this stuff to resolve here. So those are my general takes on this sort of stuff. I'm sure you've seen a bunch of threads from actual lawyers discussing the suit itself, so I'm not going to dive into that there. But I also wanted to mention that Coinbase's chief legal officer, Paul Grewal, is going to be testifying on Capitol Hill before the House Committee on Agriculture on the need for clear crypto rules and the digital asset market structure discussion draft. And you can read a summary of his testimony in this post. So that will be today, I believe, that he's testifying at Congress here. At the House Committee on Agriculture here. So yeah, you can read his statement. I'll link that in the YouTube description below. But yeah, generally, guys, I mean, if you've been listening to me for quite a while, my general take on these sorts of things is always the same. It's short-term noise. Ignore it unless you think it's actually existential for crypto. Like if you do think it's existential for crypto, then you would sell your crypto and move on. But I don't think any of you think that. And also, I should mention, I didn't mention this before, but the suit against Binance is only against Binance US. The SEC does not have any jurisdiction in Binance proper, only over Binance US. So they can't go after Binance Global. But in saying that, they do allege that CZ was commingling funds between Binance US and Binance. I've heard this story before with FTX and stuff, so we'll see how that shakes out there. But yeah, as far as the SEC's kind of jurisdiction goes, they are only able to go after, I believe, US-based entities, but potentially also, if they can work with other bodies around the world, go after companies that were dealing with US persons. So we'll see. We'll see how that shakes out. But anyway, you can check out Paul's testimony draft. I'll link it in the YouTube description below. All right, moving on to non-regulatory news, so some Ethereum-related news. I just saw this pop up on Twitter. So Mike Nuda here, Francesco, Aditya, and Justin Drake have put forward a new proposal to increase the max effective balance on the Beacon chain. So they say here, we argue that a validator set contraction has positive implications for the roadmap and the current peer-to-peer layer and the validators. So basically, right now, the max effective balance of each validator is 32 ETH. So essentially, 32 ETH is both the minimum and maximum. So if you put more than 32 ETH into a validator, it's not going to earn you more rewards. 32 ETH is the minimum, and 32 ETH is the maximum that you're going to earn rewards on there. Now, what this proposal does is say, hey, can we increase the max effective balance beyond that so that solo stakers or smaller stakers, I guess, generally can auto-compound their rewards and can also add more stake per validator instead of having to split it up amongst validators. So for example, let's say you have 40 ETH. Well, if you want to be a solo staker, you can only stake 32 ETH, and then that other 8 ETH, you have to go stake somewhere else, right? You can't stake it as a solo staker. Well, with this, if this was to be implemented, you could stake that whole 40 ETH and get rewards on that whole 40 ETH, which I think is obviously very, very cool, especially for compounding rewards as well. Because say you've got rewards coming and you want to compound them, well, you wouldn't be able to compound them until you had another 32 ETH worth of rewards to spin up a new validator. So, and this is something that I think I've spoken about before, but this is an actual proposal that's been posted to the ETH research forum from a bunch of gigabrain researchers here. So it's something that I'm definitely super interested in, and you can check out this post for yourself. It's quite long. I actually haven't read it yet because it just came out and I wanted to cover it for you guys as I recorded the refuel here. But yeah, I think this has a high chance of going in. I don't see why anyone would really be against this. And it also enables other things, as you can see here, that it unblocks single slot finality and enshrined PBS and reduces unnecessary strain on the peer-to-peer layer as well. So what it effectively would probably do is essentially reduce the number of validators on the network because people would essentially not be spinning up an extra validator. They would be putting all their ETH into just one validator or much as they can. I don't know if there's actually a maximum here of I don't know if it's going from 32 ETH to something else. So it's obviously going from 32 ETH, but I don't know what number it's going to. I don't know if it's going to be 64 ETH or 128 ETH or whatever number it ends up being. I'm just scrolling through here to see if they've actually come up with a number or anything like that. But whatever it ends up being, they would obviously be higher than 32 ETH and would allow you to stake. So I think that the number of validators on the network, if it ends up being, so for example, if it ends up being like 128 ETH, well, that's 4 times the current maximum, which means you would expect a reduction in validators by about, to a quarter of what we're at now. So if we're at 600,000 validators, you would expect that to go to around 125,000. Am I doing my math correctly here? 125,000 validators or something like that. And then it would still be the same security, but it would be less strain on the network. And it would actually mean that we have probably more time to institute a kind of like validator cap, or maybe we don't need to do it. But I don't know. I haven't read the post in full yet, so I'm just speculating here. But you can go check out this post for yourself. I'll link it in the YouTube description below. All right, so speaking of Ethereum staking, the Rocket Pool account on Twitter today put together a thread where they started off by saying, decentralization is not a buzzword. It ensures that Ethereum continues to have value as a resilient and credibly neutral blockchain. Read on to find out some ways that you can help to defend the ecosystem from a range of centralized threats. And they go over things such as obviously client diversity and solo staking and staking with Rocket Pool and different ways to stake with Rocket Pool and solo staking. So just a really great little thread here that I highly recommend reading. I'll link it in the YouTube description below. But yeah, this is again speaks to my point last week where I said that a lot of ETH's value, I believe, comes from under the surface stuff, such as Ethereum's decentralization, credible neutrality, resiliency, security as a network. And if we want to preserve those properties, we have to ensure that the backbone of Ethereum security, the beacon chain, and the stakers are as decentralized and distributed and credible as possible. We want to maximize the amount of solo stakers we have. We want to maximize the amount of decentralized stakers, staking pool participants we have. We want to make sure that no single entity has more than, I believe the threshold was 22% market share. And I was thinking about this today as well with regards to Lido's market share. Obviously, it's around 32, 33% right now. I think once the queue clears, it's going to be a bit higher than that. But I think that because of the dynamics of LSDs and how they generally work, and because of the dynamics of the beacon chain, obviously the validator, exit queue, and entry queue, I think that if we're going to eat into market share from Lido, and I've said this before on the refuel, but it's going to come from people staking with other services. So staking with obviously Rocket Pool and other LSDs, the newer LSDs like Swell and obviously Stakewise V3 and stuff like that, rather than people exiting validators from Lido itself. And the fun thing is that people can actually sell their ST ETH and buy RETH, right? And then more demand for RETH means that there's going to be more demand to spin up mini pools. So it does translate into more validators being spun up. And then if there's a discount on ST ETH and it's deep enough for an arbitrage opportunity, then what people will do is that they'll withdraw from the beacon chain and they will essentially arb that spread there. So it kind of works slowly, but it does work. And that was just something that I was thinking about today in particular. But anyway, you can go give Rocket Pool's Twitter thread a read. I'll link it in the YouTube description below. All right, Dono here from the L2Beat research team has put together a thread where it started off by saying, the L2Beat risk framework is undergoing some updates beginning with the sequencer failure assessment. And they've said, we've identified 4 categories of interaction with the sequencing mechanism. The first is self-sequence. This mechanism bypasses permission sequences entirely. allowing anyone to autonomously push transactions on L2. This is true for Arbitrum 1, where you can push transactions on L1 through the delayed inbox contract and eventually move them to the main inbox. Aztec Connect, Aztec, and Fuel V1 also fall into this category. And then they've got a bunch of other categories. The second category is Force via L1. And the next is the NQ via L1. And lastly is no mechanism. So they're basically showing you on the L2Beat website what kind of mechanisms exist for you to get your funds out of these L2s in a worst case scenario, such as the L2 basically rugging, I guess, or the L2 going offline and not being able to come back online, stuff like that. This is what this is trying to show you. So you can go check this out. I'll link this thread in the YouTube description below. All right, so I mentioned yesterday that Optimism Bedrock is going live on mainnet today. So June 6th, 4 p.m. UTC here. I don't know what the current UTC time is. Maybe I'll Google it quickly just to see if it's going to be happening soon. So the current UTC time, it's telling me it's 5 p.m., but what date? 6th of June, it's 12:52 p.m. Time of recording, 6th of June. So this is happening in the next few hours. It may have already happened by the time you watch the refuel, but there will be a bit of downtime here. I think there's like a couple of hours of downtime on mainnet here. But yeah, exciting day for the Optimism network. This is a huge upgrade for them. It's obviously been a long time coming. It's as big of as an upgrade as Nitro was for Arbitrum, and I can't wait to see how, what the fees end up being, how people start building apps on Optimism, upgrading their apps to take advantage off of it, and people using the OP stack are also going to be able to benefit from this as well. So you can go check out this post and this thread from Optimism. I'll link it in the YouTube description below. All right, last up here, we have Immutable introducing their Immutable product roadmap. So they say here, Immutable is committed to transparency and building in public. Our product roadmap will be updated monthly to provide insight on our long-term vision and what the Immutable product team is prioritizing. So you can see here that this is basically the product roadmap in a nutshell. So you have obviously Ethereum at the bottom here. You have two layer 2s, Immutable X and Immutable ZK EVM, which is powered by Polygon, and Immutable X is powered by Starkware. And then you have the Immutable suite of products, such as their Passport product, gaming SDKs, NFT trading, and so on and so forth. And then there's more details about this as you scroll down here. So great to see Immutable continuing to build throughout the bear market. They're in a tough market right now, I think, because they're not only in a bear market, but they're building for NFT and crypto gaming, which is in its own bear market right now, I think. So kudos to them, obviously, for continuing to build through here. And they've been building for a very long time, actually. For those of you who remember their first game, Gods Unchained, that came out last bear market. And since then, they've just continued to build that game out. They've onboarded other games. They're building, obviously, their L2 platforms. They were actually very early to L2s as well. So continuing to innovate, continuing to build no matter what the market is doing. So kudos to them. But you can check out their roadmap or their product roadmap for yourself. I'll link it in the YouTube description below. Now, I have a few minutes left here in today's episode. I did want to continue the conversation about the regulatory stuff for a little bit. I know I talked about it a lot at the start, but I think I want to change gears a little bit from the SEC and look at the regulatory regime for the rest of the world. So the US, I think, is in a unique position. This isn't a good position to be in, but in a unique position where it's taking a very hardline stance against crypto, whereas pretty much everywhere else in the world that is, I guess, economically relevant to crypto, where there is active crypto communities and active crypto buyers, such as Europe, such as Asia, and other parts of the world, of course, like Africa and India as well. But I think India is still pretty hostile to crypto from the last time I checked, but they're getting better. But these other places, especially Europe and particular Asia and even China now, like Hong Kong, they're actually embracing crypto in a really big way. Europe recently passed, or the EU, I should say, recently passed that new legislation, MiCA, I believe it's called, which provided clear guidance on crypto. So same with Hong Kong, and they're actually going to be starting crypto trading again for a select bunch of assets. Which, funny enough, the assets that they're trading look very similar to the assets that the SEC lists as securities in their Binance and Coinbase suits. But maybe that's just a coincidence. I don't know. But yeah, it's just kind of funny to see the juxtaposition between the various different jurisdictions around the world, and it really does seem insane to me that one person, so Gary Gensler at the SEC, and maybe some others at the SEC, but Gary Gensler is obviously in charge there, and a few of the top-ranking Democrats, like Elizabeth Warren, who says that crypto is basically the devil, like I guess a few, I don't know all of the names off the top of my head, but a few, you know which ones I'm talking about, the high-ranking Democrats out there. Brad Sherman, I believe as well, really hates crypto, but I think he's just really corrupt from what I've seen generally. So I don't know if he hates crypto or just hates America generally. But looking at that and looking at their stances on it and how really a small group of people can dictate what happens with an entire industry just screams to me that there is a broken system there. And it really gives the opportunity for other jurisdictions around the world to seize it and to take market share away from the US. And I think the US is blowing it in a really, really big way here. And if they keep stonewalling, if they keep down this path, as I've said before, they're going to lose, and they're going to lose big. Can you imagine the next bull market rolling around and the US not being the premier place for capital to flow through, and a lot of the exchanges are based offshore. None of the revenue is being seen by the US. They miss out on all this tax revenue. They miss out on all this economic activity, all this business activity. No one's starting businesses in the US anymore. They're all starting them overseas. That's really bad, guys. That's a really bad outcome for not only the US, but also for the American people. Like, I feel sorry for the American people. A lot of them don't want this. I mean, I would say most of them don't. Pretty much anyone in crypto doesn't want this. No one is asking Gary Gensler, the SEC, or any of these bodies to protect them. No one wants this protection. No one's even asking for it after all the blow-ups we saw last year. We want to be left alone, basically. We do want better, obviously better protections in place for centralized actors like centralized exchanges. We do want clarity on things so that teams can actually build this stuff. But mostly, we just want to be left alone to do our own thing. And if you're going to go after anyone, go after the actual fucking scammers. Stop going after the legit players. How many scammers in crypto have just completely gotten away with everything and never been charged with anything because it's not in the SEC's interest to do that, because it doesn't give them headlines, right? It only gives them headlines if it's a celebrity. But how many scammers, grifters, rug pulls have we seen in crypto, and these people just got away with it? Nothing happened to them. It's fucking ridiculous. Like, this is the angry part that I was talking about earlier. It's absolutely ridiculous, and it really, really pisses me off that this is going on. But and the fact that they can stand there and go on video and kind of give testimony and say that they're committed to protecting investors and they're doing this to protect investors is the biggest load of fucking shit I've ever heard. It is beyond logic, right? It's beyond reasonable. It doesn't make any sense, and I think they know that, but I think they just don't give a shit. So when you have regulators like this, when you have hostile politicians like this, something's got to give. And you know what's got to give if the US doesn't become friendlier? Crypto just leaves the US. Crypto is not going away. It's not going to die. You're not going to kill it by doing this stuff. What you're going to do is you're going to push it away from the US, and it's going to be adopted by other countries, other jurisdictions, and people are just going to use it because they want to. They want to invest in it. They want to use the products. They get value out of it. So stop trying to mess with it and embrace it. All you have to do is provide guidance. Do your fucking job. That's all you have to do, instead of doing this, right? Instead of being like self-serving and being an unelected bureaucrat who knows that you can't get fired and people can't vote you out. And the only way that you get removed from your position is if you get promoted, or is if the regime changes and you get kicked out. But again, you're probably just going to get promoted anyway, whether that's in the public sector or you go work for some investment bank on some cushy salary. That's the end game there for a lot of this stuff. And this is, again, why I absolutely hate politics. I hate all that bullshit, because there's so much self-serving going on there. There's so many games being played. It doesn't help anyone. A lot of the times, it's basically just most of the time, it's really just self-serving. Not to say that all government is bad, and I'm not trying to say that, like, I try to be a hardcore libertarian here or anything like that. I don't think all government is bad, but I think when it comes to our industry in crypto and all the stuff that they've been doing, they haven't played nice with us at all. They haven't tried to help to protect investors, and they're really just gaslighting us at the end of the day. But anyway, I'm going to end my rant there for today. I hope you enjoyed that little rant, but that's going to be it. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.